Welcome back. Still 100 points higher on the index, but the big story is an underperforming stock. The fall in Kaynes Technologies now for the third straight session. Report from Kotak Institutional Equities yesterday citing a lack of disclosures and a lot more. Upasana is joining in with more on this. Upasana, first tell us more about what the report had to say and the impact of that.
Well, the stock is facing a balance sheet and cash flow concerns with a question mark on the company's revenue growth, excluding its smart meter business. Now, they are doing such a large capex, but have a negative cash flows is what the street is worried about. Now, let us look at the key concerns flagged off by Kotak in its report, in which the company says that there has been a significant revenue and profit contribution from company's smart meter business, which is questionable. Next up is the ambiguous accounting treatment of the company's goodwill and reserve adjustment under various acquisitions done by the company in the past 1 year. And also, when we look at the intangible assets, there has been a sharp addition here for the technical know-how. If we look at the total percentage of intangible asset as of revenue, it has gone up from 0.8% in FY24 to as high as 6.5% in FY25. Now coming to the cash conversion cycle, there has been a 22-day increase here, and even high capex has led to a negative FCF. Now, next up, we are focusing on the capital allocation strategy, on which Kotak says that the company's focus on capital allocation strategy and even high capex requirement and even pending government grants is the thing on question mark. And lastly, the complex accounting measures followed in terms of cash capex compared to the asset additions is also under a big question mark. So all in all, these are the key questions highlighted and raised by Kotak in its report.
Okay, all right. Thank you so much for summarizing that for us, Upasana. But Mangnam, let's break it down further, number by number. What exactly is that report indicating?
You know, it's a very detailed account of the reconciliation of all these expenses that the company's been making, acquisitions that the company's been making. So on all the things that Upasana pointed out, you know, I was just looking at it, significant revenue profit contribution from the smart metering business, which is Iskraemeco. Out here, they've said that the full year's revenue of Iskraemeco, 620 crores and nearly 49 crore profit has accrued in the second half of FY25. Iskraemeco actually reported a full year net profit of about 60 lakh rupees. So what does this imply? That in the second half, they did 28% net margin, which is unusually high for a smart metering business. And the second part is that if the second half did a profit of almost 49 crores and the full year profit was just about 60 lakh, so that means the first half was a loss of 48 crores, which is, inconsistent because FY24 was profitable and there was no evident cross driver in the first half for such a swing. The second part, ambiguous accounting treatment of goodwill and reserve adjustments under acquisitions. They acquired a couple of companies, Iskraemeco and Sensonic, for about 883 million rupees. And there was a goodwill of almost 114 crore on this. But that wasn't reflected in their balance sheet. In fact, what it did was the actual goodwill adjustment was a negative 10 million rupees because they saw an increase in general reserves and at the same time adjusted that by increasing addition into intangibles by about 180 crore rupees for technical know-how. So that is what the goodwill accounting was. And speaking about the technical know-how, you know, there has been inconsistency in related party transactions as well. The company that they bought, Iskraemeco, so Kotak went ahead and looked at their reports as well. Purchases of 180 crore from Kaynes, which was reflected in Iskraemeco's numbers, were not actually reflected or disclosed in Kaynes related party disclosures. Year-end payables to Kaynes Technologies of about 320 crores or 180 crores to Kaynes Electronics and some receivables of 190 crores from Kaynes Technologies too, not reflected in all the other related party disclosures for Kaynes Tech, which is something that Kotak found from Iskraemeco's receivables and Iskraemeco's numbers. And the 22-day increase in cash conversion cycle also on account of something like this as well. And the final one that was very interesting was the FY25 cash flow statement indicates a purchase of 950 crore worth fixed assets. But when they look at the balance sheet, look at the property, plant equipment, all the increase in the assets, that does not reconcile with that. In fact, you know, the additions to the balance sheets account for just about 7.7 billion as against the outflow of about 9.5 billion. So detailed reconciliation and accounting, mismatches.
Talking about in the morning as well on Bazaar, the stock in the last 25 sessions has before today's session, had gained only in 5 of them. So that is what the kind of underperformance that you've seen for Kaynes. We spoke to the management earlier in the day. Listen to what they had to say.
It is only in the standalone we have missed, which we clearly clarified.
Okay.
Notes to accounts, it is missing. That's all. That is also in one company. But if you see the P&L as well as in the balance sheet, it is all appearing. There is no inconsistency, whatever he is saying. However, we agree that there is a miss there, and which we will take corrective action. See, this is an age receivable in Iskraemeco books. Whatever, when we acquired itself, it was there, which we will be reconciling and closing it.
Okay. By when, sir?
By this financial year end, we should be able to close it. See, this is a capital-intensive business. However, we are working, and by the financial year end, we will bring it to sub-90 days cash cycle. So with that, it will become positive. And we are having plans put in place to achieve this.
By when, sir, will it come down to less than 90 days?
By this year end.
And you turn free cash flow positive, operating cash flow positive?
Yes.
By when?
By this March, it will be OCF positive.
All right, so that's what the management had to say, but there has been no respite on the stock despite the clarifications coming in from the management on the exchanges as well as to us here on CNBC-TV18 as well. In fact, the stock is currently at the low point of trade, and a large part of that could be attributed because of the things that I'm just noticing. If you look at the futures plate right now, there's been a sharp increase in the open interest, telling you that there is a fair amount of short build-up that we're seeing. Nearly 11-12% increase over the total open interest that there was yesterday. 4.5 lakh new shares added on the short side here, understandably, and the open interest is now at 76% of the market-wide position limit. So a few more lakh shares get added and the stock goes into F&O ban. So that's something we will monitor. And if you look at the promoter stake over the last few years as well, the company has been raising funds, tapping the equity markets for capex that they've been speaking about. The promoter stake has come down from 63% to 53%. And finally, if you look at the ownership on the stock as well, the FIs own about 11% stake, the DIIs own about 24% stake. So maybe institutional flows as well impacting the stock right now. Maybe, some of the institutions will be very interesting to see how the bulk deal data plays out over the next few days.
Okay, all right. A big downtick on the stock, and that continues, right? Despite, as Manglam said, despite the clarifications that have come by from the management to the exchanges, and also on CNBC-TV18, the line said inadvertently they could not disclose certain things. But I think that's not how accounting works, because there are rules which are set in place. So maybe that is something that the street is not liking. There cannot be inadvertent errors when it comes to reporting or accounting for some of the transactions that the company said they were not able to report. But we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on markets on the other side and a lot more.